LLC, S-corp, C-corp, what's the best for your business? Let's find out. Stick around to the end and I'll give you a simple checklist you can use to make sure your business is set up the right way. I'm Gerri Detweiler here for NAV, and NAV believes that every small business deserves the chance to succeed. What is a business entity? A business entity is a separate legal structure that separates you from your business, and it has all kinds of benefits. If you don't choose a business entity, you're automatically a sole proprietorship. That means you and your business are the same. There's no legal separation between you and your business. It's the easiest way to start a business, but it's not ideal, and I'll explain why. Here are the most common business entities. A sole proprietorship, which is just you start doing business. There's no legal entity. An LLC, or limited liability company. These are very popular with small businesses because they're pretty easy to set up and pretty easy to operate as well. Another option is a corporation. Now, a lot of times bigger companies or companies that want to raise money or go public choose this option, but sometimes it's right for smaller businesses as well. An S corporation isn't really an entity itself. You set up an LLC or a corporation, and then you choose and elect with the IRS to be taxed as an S corporation. This is popular with small business owners who may want to save money on their own payroll taxes. And then there's a partnership. A partnership is a formal arrangement between two or more people who want to operate a business together and share in the profits. There are different types of partnerships: general partnership, limited partnership, and limited liability partnership. The reason a sole proprietorship isn't considered ideal for a small business is that you are completely responsible for all the activities and debts of your business. If there's a lawsuit, if you can't pay a bill, you personally can be held responsible. And another reason it's not as popular is because it is harder, not impossible, but harder to build business credit, and you can't really get financing just in the name of your business. So certainly if you feel like you need to start this way, it can be okay, but make sure you understand the ramifications of not forming a business entity. If you really want to grow your business and scale, you're probably best off starting a business entity as soon as you can. The other reason a sole proprietorship may not be ideal is from a tax perspective. This is definitely an area where you want to talk to your tax professional to decide what's right for your business. Let's talk about the benefits of forming a business entity. Liability protection is a big one. It separates you from your business. So if there's a lawsuit, if there's a creditor who pursues you for a debt, you probably can avoid personal liability. You may also qualify for a more favorable tax structure and save money with more tax deductions. You can also get access to a wider variety of credit and loans. Some lenders will only lend to business entities. They won't lend to sole proprietorships. And you're probably not going to raise money from investors as a sole proprietorship. When it comes to getting financing, most lenders will require an employer identification number, or EIN, and that's a number that identifies you for tax filing purposes. Some lenders will also require that your business be structured as an LLC or a corporation in order to be eligible for funding, and they may require proof of that business organization or perhaps even a business license if it's required for your business or your profession. You can get an employer identification number for free, and we'll put a link in the description that will tell you how to do that. You can build business credit as a sole proprietorship, but it's not as easy as it is if you have a business entity. And another thing to keep in mind is that if you later decide to incorporate or form an LLC, you may have to start over again on that business credit building process. So if you think this is something you want to stick with, you may want to consider forming a business entity sooner rather than later. If you're a solo business, LLCs are very popular. They're pretty easy and pretty inexpensive to set up and pretty easy to maintain as well. If you want to save money on payroll taxes, you may want to consider setting up as an LLC or a corporation and then electing to be taxed as an S-corp. Again, talk to your tax advisor. But for some businesses, this can save a lot of money on payroll taxes. This is how I set up my business, and I chose a corporation and elected to be taxed as an S-corp. In hindsight, I wish I were an LLC. It's less paperwork and a cheaper tax return, but it still does save me a substantial amount in terms of payroll taxes. And then if you really want to grow your business and you want to get investors or you hope to become a really big company, you may want to consider starting as a corporation. It can be more expensive, but it is often the most preferred structure for people who want to bring in other investors into their business. We'll give you some resources in the description below. And when you're ready to take that next step, NAV has prepared a free checklist you can use to set up your business the right way. Check out the next video. Let us know in the comments what type of business you're starting. We'd love to hear about it. If this video was helpful, like and subscribe for more videos on business building tips.